today our topic is about talking about the expenses which we didn't pay yet. We should pay but didn't pay it yet, or expenses we pay in advance. Same for revenues we didn't receive yet or we receive in advance. So those four things are also related on what we call it accrual and matching concept. Accrual concept, as our friend here said, is the revenues or expenses incurred but haven't paid yet. So this is, we call it the accrual. When we have the obligation to pay, so we have to record the expenses. When we have the obligation to receive, we have to record the revenue because it's obligation already, even if we will not pay the cash yet. And we have the matching concept. Matching concept is one of the concepts relying on matching the revenue and expenses of the financial period in the same period. Let's say a matching concept, it means matching the expenses of 2019 with revenues of 2019. Matching expenses of 2020 with the revenues of 2020. So we have to be very careful in deciding that each financial period, what are what we call it, the revenues and expenses related to that period. So based on the accrual and matching concept that we have learned, these items need to be adjusted first before we can prepare the final account of business. So in this chapter, what we will learn, we will look at the year-end entries which are necessary to reflect the accrual concept used in commercial enterprises. We will discuss the need to allocate revenues and expenses according to their respective period. As we mentioned, we have to allocate expenses and revenues according to its respective periods. We will then demonstrate the adjustments for prepaid expenses, prepaid revenues, accrued expenses, and accrued revenues to confirm the accrual concept of accounting. Okay, so what we have learned, we will learn that how we can record these expenses which is not yet paid or we paid in advance. We call not yet paid, we call it accrued expenses, which we pay in advance, we call it prepaid expenses. Also, we have the revenues which not yet collected, we call it accrued revenue, or the revenues which we have collected earlier, we call it prepaid revenues. So we already know how to measure profit from the difference between revenues and expenses. However, while we do this, we have to ensure that the conventions of accounting are fulfilled and not violated in any way. The following are some of the conventions or assumptions that we need to consider. This is some assumption which we have always to keep in our mind, that we have to fulfill this assumption before we proceed or before we consider our financial statements are correct or our transactions recorded are correct. So periodicity assumption, accountants make the assumption that the economic life of a business can be divided into artificial time. This is one of the things which is very important we have to keep in our mind, that we have to divide the life of the company into artificial periods, and this is what's normally happening in entire the world, and they agree to make it a 1 year. Most of the companies, this period is starting from January, end of December. Some they have different starting and ending months, but mostly they go in 1 year, January to December. So accountants made the assumption that economic life of a business can be divided into artificial time periods. This assumption is referred to as periodicity or time period assumption. Many businesses' transactions affect more than one of these arbitrary time periods. Therefore, it's necessary to determine the relevance of each business transaction to specific accounting period. So when we decide to divide our lifetime of our business into years, we have to make sure that each transaction or each expenses or each revenues is related to that year. Then we go to the matching concept. we have to match each expenses with each expenses of the period with its revenues. We have also the accrual basis of accounting, which we have learned earlier, that it means that events that change in business financial statements are recorded in the periods in which the events occur, rather than in the period in which the business receives or pays the cash, as our friend explained earlier. So, example, revenues are recognized in the periods in which they are earned, and expenses are recognized when they are incurred. Therefore, accountants have developed two principles as part of GAAP to have this determination. One of it is revenue recognition principle, which indicates that revenue is considered to be earned in the service enterprise at the time the service is performed. So one of the principles, as we mentioned, if we have a service company, the revenue will be considered earned once we perform the service, because in that time we can put the business as we can put the customer as debtor. So once we perform the service, we can directly put the customer as debtor and send him the invoice. Example, assume a dry cleaning business cleans a patch of clothing on 31st July, but customers don't claim and pay for these clothes until the first week of August. Here, our example, we consider the financial period a month, okay, not a year. So let's say that end of July, we finished this service, but our customer, he came in August. Under this revenue recognition principle, revenue is earned in July when the service is performed, and not in August when the cash is received. So at 31st of July, we can, if we consider it as the end of financial period of that company or something like this, the dry cleaner would report an asset or an accrued revenue on its statement of financial position and revenue and its profit and loss statement. Okay? So again, based on the revenue recognition principle, we have to keep in mind that revenue will occur once, as let's say, as example for the service company, the revenue is occur once we perform the service. So even if our customer didn't come to pay the bill or didn't come to get the bill, we already can record that as revenue for us. We can record that as debtor, and we can consider this amount as revenue. So that about the revenues. Let's go about expenses. Recognizing expenses, accountants follow the approach of let the expenses follow the revenue. That's what we said. We have to have matching, that as we are receiving the revenues, we are considering the revenues when the service is done. The expenses will be same, and you will have that, what we call it, let the expenses follow the revenues. The practice of expense recognition is referred as matching principle because it indicates that efforts, expenses, be matched with accomplishment, revenues. So we always have to keep in mind the matching principle between revenues and expenses. We have to match between the revenues and expenses happening in same financial period. So as example, following the previous example which we were talking about the dry cleaning company, the salary expense incurred in performing the cleaning service on 31st July should be reported in profit and loss account of the July month, as in which the service revenue is recognized. Expense may or may not be the same period in which the expense is paid. So as we mentioned again, we have to keep in our mind the accrual principle, which means that doesn't mean that we have to pay the expenses till we consider it. It doesn't mean we have to receive the revenue till we consider it. It's once the application is done, that there is obligation we will receive the money, there is obligation we have to pay the money, then we recognize the expenses and we recognize the revenue. Then we have to take in mind that we have to match the revenues and expenses of a financial period together. Let's say we have revenues related to a specific month if we are taking our financial period as a month. So we have to match between the revenues and expenses of that month. Or let's say that we are taking as a year, so we have to match the expenses and revenues of that year together. It's not okay that we consider just the expenses of 2019, then we see there is some revenues related to 2019 but not being recognized, and vice versa. So here, to do that, what we are talking about the matching. So in order for revenues to be recorded in a period in which they are earned, and for expenses to be recognized in the period in which they are incurred, adjusting entries are made at the end of the accounting period. Adjusting entries are required every time financial statements are prepared. A trial balance to be adjusted may not contain up-to-date and complete financial statements data for the following reason. So why we need adjusting entries? As we mentioned, in order to revenue to be recorded in the period in which they are earned and expenses to be recorded in a period where they are incurred, adjusting entries are made at the end of accounting period, okay? Adjusting entries are required every time financial statements are prepared. So here it depends. Are you preparing your financial statements each month, or are you preparing your financial statements each year? So when you want to prepare the financial statements, you have to do the adjusting entries. So why we need first, adjusting entries are required every time financial statements are prepared. A trial balance to be adjusted may not contain up-to-date and complete financial statements data for the following reason. Some events, such as earning of wages by employees, are not journalized daily because it's impractical to do that. Impractical to do that. The expiration of some costs, such as building and equipment deterioration and rent and insurance, are not journalized during the accounting period because this costs expire with a passage of time rather than a result of recurring daily transaction. So here we are talking if we are doing our financial statements per month. Some items such as the cost of utility service may be unrecorded because a bill of the service has not been received. So these things we have to consider in adjusting our trial balance. If you remember 2 classes ago, we learned how to do the trial balance. So we have an end of the financial period to do adjusting for the trial balance to consider the expenses and revenues which was not recorded. So we have two categories of the things. We have prepayments, we have accrual. Prepayments, things which we have paid earlier or received earlier. We have prepaid expenses, we have prepaid revenue. And the accruals, things we not yet pay while we have to pay, and or not yet receive while we have to receive. So we have the accrued expenses and accrued revenue. So all today topic, all today discussion is related to accrued revenues and accrued expenses, and prepaid revenues and prepaid expenses. As we mentioned, we have two categories for types of, we have two types of adjusting entries, are two categories. First is a prepayment, second is accrual. So that prepayments, we have prepaid expenses, which are expenses we have paid earlier. We have prepaid revenues, which are revenues we have received earlier. We have the accruals, which we have the accrual expenses, which are expenses we have to pay, we didn't do. We have the accrual revenues, which are revenues we have to receive, we not yet do. So the prepaid expenses, it's if it's not adjusted, it means part of next period expenses were being matched against this period revenue. The prepaid revenue which are the revenues of services are paid but not yet completed. As example, spa package. If a customer pay for 10 treatments and this one is not yet performed, not supplied, we will refund it. So it has the nature of current liabilities. So we have to do that. The accrual expenses amount paid for the period is less than the expenses incurred. So most common wages. The accrued revenue earned but not recorded yet, normally happen for the non-operating income. So this is what we have the 4 categories, which are the prepaid revenues, prepaid expenses, incurred accrued revenues, and accrued expenses. So let's take one example about prepaid expenses, which are expenses paid in advance. We have this company, Muzaffar Trading Company, pays a 12-month motor vehicle insurance premium of 200 ringgit on 1st of May. So they paid 12 months motor vehicle premium insurance for the amount is 240. They paid 1st of May. This would be recorded as a debt 240 to the expense account, motor vehicle insurance expense, and a credit to the asset account cash. Let's say how we can record this transaction. As you mentioned, we pay 240 as cash for the insurance. So when you want to record the transaction is debt, insurance, or motor vehicle insurance, credit, cash. And amount is 240. This is the normal recording we do in our journal. Then this would be recorded as we mentioned here, 2 months later, the ledger has to be closed to determine the profit. Thus, it's necessary to recognize 2 months of or 1/6 of the 240. Here, the transaction happened in May. Here, the transaction happened in May. This company, their financial period will end in July. So they will include only June and July. So if we divided the 240 on 12 to see what is the amount of each month, because 240 is the amount for 12 months. So if you divided the 240 on 12, we will see that the expense, we will see that per month is 20. So this one is the amount of insurance related for each month. So if you need to close after 2 months, we need to close our accounts in 2 months. So we need to consider only 40 related to this year or to this financial period. The rest, which is 200, are related to next financial period. Okay? So what we have to do, we have to consider this 200 as prepaid expenses. So again, we have here our example about prepaid expenses, which are expenses we have paid in advance. As example, we buy insurance package, which is 240 for 1 year. This one we buy it in 1st of May, and our financial period end of June, each 6 months. Okay. So what is related to this year? Only the May and June month of this package. The rest are related for next year. So how we can calculate how much related to this year? First, we divide the amount in 12 because this one for 12 months. So we see 240 divided on 12, so it will be 20 per month. What is related to this financial period are 2 months, which is 20 multiplied by 2 is 40. So we have to consider only the 40 as expenses of this financial period and the 200 as prepaid expenses. So what we need to write, first we have to write the initial transaction, which is in 1st of May, which is debt, insurance expenses, credit, cash. Second, we have to calculate how much the amount for each month. As you can see here in this black space, that 240 divided in 12 is 20. So for this period, we have only 2 months, which are May and June. So they are 40. Then the prepaid expenses is 200. Then we have to do this transaction, or we have to write this transaction in our journal. Prepaid insurance, debt, credit is motor vehicle insurance expenses. So the question here, why we put the expenses in the credit side? So decrease the expenses. As we mentioned here, when we write the first transaction, if you see here, when we write the first part, which is recording the expenses, we put the expenses in the debit side, okay? As you see here, insurance expenses is put in the debt side because it's increased. Now we want to decrease the amount of expenses related to this financial period. So normally when we want to decrease the expenses, we put in the credit side. And that's what happened here. So after this entry has been posted, the ledger account would be as follow. We need to, we need to post this transaction to the ledger. So we have to have prepaid insurance, and we have to have the expenses itself. So the expenses itself, we have the 240 in the debt side, which is the posting of this transaction. So we have 240 in the debt side. We have 200 in the credit side. Then how much will be the balance? Will be the balance 40. If you want to balance this T account, so the balance will be 40. So debt balance, then like this, we close the insurance expenses for this financial period. As you see, we have our debt side is higher than our credit side. Then we have to close the balance. So this is the balance. It means this is the amount which related to this financial period. Then we have the prepaid insurance, which is this one. We have to put it here, and we have to do the recording. So the initial transaction, which we are posting here, is the initial transaction is debit, insurance expenses 240, credit cash 240. Then we do the adjustment. This was the adjustment entry. Then we do the ledger. The amount in the expense account would be close to the profit and loss statement. Our statement of comprehensive income, okay? So this 40, because as you know that all our expenses or all our revenues should be closed in the profit and loss statement. So this 40, which we said it's the balance of our expenses, we have to close it at the end of the financial period in the profit and loss statement. You see? Because this one is debt balance. When we close it, we put it here. So we have statement and profit and loss, and then the expenses. This is a 40 to close that balance. Then the balance will be 0, because here we will put another 40. So the balance will be 0. So the amount of the expense account will be close to the statement of profit and loss. Our other comprehensive income, the closing journal entry, it will be like this. So again, 240 divided in 12 months, it will be 20 per month. Here, which is related to this financial period, is 2 months, which means 40 ringgit. So the prepaid expenses is 200. The 40 ringgit, we consider it as balance, and we already close it in the profit and loss statement. Then the 200, which we already registered it, we have also to close it, and it will go to the this one. It will go to the balance sheet. So what is related to this period, which is a 40, which will go to the profit and loss statement. Which is related to next period, it will go to the balance sheet, because this balance we have to take it forward, and we will consider that is money we have it with others, because we pay these expenses earlier or in advance. So like this, it will be closing of the insurance expenses. You remember this is the first transaction we wrote when we paid the 240 in the 1st of May. In the closing, which is 30th of June, because this company, they have their financial statements closed each 6 months. So we have the 200, which is the amount related to the next period. And we call it the prepaid insurance. We have the 40, which was a balance, where we close the balance in the profit and loss statement. Okay? So, as we mentioned, the prepaid expenses, it will go to where? It will go to the financial position. Why? Because it's considered as an asset. Is money for us, we have it with others. We not yet get that service or get that things. So for that reason, we consider it as asset. This prepaid expenses considered as asset, and it will go to the balance sheet. So as the time passes in the next period, more and more of the insurance premium will be paid, thus ceasing to be an asset. In recognition of this, the full prepayment is immediately transferred back to the expenses account. This when we start next year financial accounts. When we start, because first one we were talking about one financial period, then we finish, we close everything. In the next financial period, we have again to play or to use the money which we put it as prepaid expenses. So again, we return it to the expenses account. We just put the account vice versa, the transaction vice versa. If you remember the expenses, when we want to decrease it, we put it in the credit side. So now again, we need to increase the expenses. So we'll put it in the debit side, and the other side it will be the prepaid expenses. This one we do only in the next year. Okay? So at the first year, we already recognize the money which we have paid in cash. Second, we already recognize how much related to this period and how much related to the next period. Then we close the transactions, we close all our accounts, and we take some of it to the balance sheet, we take some of it to the profit and loss statement. Here we finish this financial period. Let's say this financial period is 2020. We want to start 20 and 21. We have again to take back the expenses which we put it as prepaid expenses, and we put it back in the expenses account. We have again to put a vice versa of that financial transaction. And again, we have some entries in the ledger just to do all this adjustment. We were talking about the prepaid expenses in the first part of our class today. Now we're gonna to continue to talk about the prepaid revenues. Okay? So again, we mentioned that prepaid expenses is the expenses which we have paid earlier. So we have to reduce the amount of the expenses which we have to pay. Now the prepaid revenue is a revenue which we have received earlier. We should not receive now, we receive it earlier. So we have to reduce the amount of the revenue which we have received. Let's take an example about the prepaid revenues. Again, we mentioned the prepaid revenues paid for but not completed yet. So these revenues we receive for service we didn't do yet. Example. The company, this one, received a 12-month subscription from a customer on 1st of March of 84 ringgit. So again, this company received in March 84 ringgit for 12-month subscription. So 84, we need to divide it in 12. How much it will be? So it will be 7 ringgit per month. We received this amount in March. So what is for this one? We're still in the same company. Their financial period end in June, end of June. So March, April, May, and June. So for this year, we have 4 months. Okay? So again, We have the amount which we have received is 84. This one we receive it for 1 year or 12 months subscription. So each month is 84 divided in 12. Each month is 7 ringgit, which is related to this month. How much received related to this year? We have the 12 months, we have the 7 ringgit per month. And how many months? As you see here, we started from March. So we have March, April, May, and June, because this company is still ending its financial period in June. So it's 7 multiplied by 4 is 28 ringgit. The amount related to this year. Okay? So this would be recorded by the. So when we are receiving the money, the 84 ringgit, what we will debit the asset, which is the bank. We receive the money, and we will credit the revenue. At the end of June, when the profit or for the period to be determined, only 4 months of subscription period have to be determined, have to be passed. So only 1/3 of the year subscription received has been earned. The remaining, which is a 56 ringgit, is applicable for the next period. So what is related to this period, as we mentioned, is only the 28 ringgit. The rest of the money, which is 56 ringgit, is related to the next period. So we do the transaction as follows. First, the initial transaction, which is when we put debit bank, credit the revenue, because we receive the revenue cash. Debit bank, credit revenue, we receive this revenue cash and bank. So we do normally debit and credit. Then we have to calculate how much per month. Like let's say, as you see here, we divided the 84 ringgit on 12 months, so 7 ringgit per month. Then the payment is 7 ringgit per month. Then for the period, we have from March, April, May, and June, we have 4 months. So it's 28 ringgit. So the prepaid expenses is 56. How we write this transaction to put the prepaid? We have to decrease the revenue. Revenue by default, it goes to the credit. So when we want to decrease it, we put it in the debit. So we have the subscription revenue is debit side, and the prepaid revenue is a credit side. Then we transfer this one to the ledger, as we always do. Then we do the transaction, we close the things, we close the balance of the, if you see here, we have a balance. In the subscription revenue, we will have a balance. This balance will go where? In the profit and loss statement. Then we do all these ledger transactions. We do all of this closing in the ledger. So again, the point of accrual, or sorry, the point of prepaid is something we paid earlier. We didn't pay it when it should be, we pay it earlier. So we have always to keep in our mind how we can reduce the things which we have paid or things we have received. So as I mentioned earlier, as expenses, we have the prepaid expenses. So we have to reduce the expenses amount. So we put the expenses itself in the credit side, and the debit side is the prepaid expenses. Then for the revenue, we receive more, then we have to decrease. The revenue by itself, it will go for the credit side. So when you want to decrease it, we make it in the debit side, and the other side is the prepaid expense, prepaid revenue. So this is how we deal with the prepaid. We have also another type, which we call it the accrual, which we have to pay, we didn't pay. We have to receive, we didn't receive. So the first side, when we were talking about prepaid, the conclusion, we need to decrease the amount which we paid or received. So we are putting the transaction in we are putting the account in the opposite side of itself. As example, the expenses by nature are debit. When we want to decrease it, we have to put it in the credit. Then we put the prepaid expenses in the debit. The revenue, the by nature is a credit. We want to decrease it, so we put it in the debit side. Then we put the prepaid revenue in that credit. So now when we are going to the accrual, we do totally vice versa. Because we need to increase the amount, the expenses we have to pay. So we need to increase the expenses. The accrual expenses we have to pay. We didn't pay it. It means we have to increase the amount of expenses related to this period. Accrual revenue, we didn't receive it. It means we have to increase the amount of revenue which we have to receive for this period. So when we are increasing, if you remember when we talk about the expenses, by default is debt. So when we want to increase, we put in debt side. Revenue by default is credit. When we want to increase, we put in the credit side. Then we put the prepaid, the accrual expenses in the credit side, and we put the accrual revenue in the debit side. You need to keep these things in your mind always. Which one you need to put in debt, which one you need to put in credit. So to know whether the prepaid or the accrual should be put in debt or credit, you need to keep in your mind that what is the other side of the transaction. As example, as I mentioned, the debit, the expenses by nature is debit. You know, the expenses we put in the debit. When we increase the expenses, we put in the debit side. So when we are talking about accrual expenses, so it means the expenses which we have now, we need to increase. So we put the expenses on the debit side, the accrual will go on the credit. When we talk about the prepaid expenses, we need to decrease the amount of the expenses. So it means the expenses should go to the credit, then the accrual will be in the debit side. So let's talk about the accrual expenses and revenue. So now the accrued expenses, which is amount paid for the period, is less than the expenses incurred. As example, wages, because we know that salaries normally will be paid in the next month. Like here, okay, they pay 24, but let's say some companies, the salaries for the month, they pay for next month. So sometimes between these 2 months will be the transferring between one financial period to another one. So we have to consider the accrued expenses. Let's take this example. The company, same company we have talking about it, Muzaffar company, is the wages bill is 350 a week with 5 working days. So this one 350 a week. On the statement of the financial position dated 30 June, a total of 17,850 have been paid of the year, and wages of 3 working days of 210 were owing. How much the amount is owing is 210 because they are paying weekly. Okay? So how much the amount we have to adjust is 210. Again, this company, they pay 350 a week, and they told you what we owe. We pay everything. We owe only 210. We should pay. So normally the wages expenses, when you want to increase, we should put it in debit side. So this is the wages expenses in the debit side. We put the accrued expenses in the credit side. So this is the journal entry to do this adjustment. End of the financial period, which is June 30, we have to do the adjustment of these wages. They already told us that we have this amount we didn't pay. We still own this amount. So we have to pay. So this one, we call it accrued expenses. Why we put the expenses in debit and the accrued in credit? Because we need to increase the expenses. Expenses, when we want to increase it, we put it in the debt side. Then the other side will be the accrued expenses. So as you see here, what is not recorded yet is the amount which we didn't pay yet, which is a 210. So here, if you see, the total for the year is 18,060 to be charged because it's already incurred. And the part which is not yet paid, as they mentioned, is 210. 210. So we need to recognize this payment, and we need to do that what we have done in this transaction. Then we do the accrued expenses, which we put it here already. Then the T account of the accrued expenses, we have this one 210 in the credit side. The accrued expenses will go as liability because this is a money for others with us. If you remember when we talk about the prepaid expenses, we said it's asset because it's money for us with others. The accrued liability is money for others with us, so it will go as liabilities. Then we have to close the expense, the balance of the expenses, which will be the total amount related to this year. Then we do the rest of the closing accounts. Next year, when we want to open, we have again to add this accrued expenses to the expenses, and we do the transaction. Sorry, we have to reduce the expenses with the accrued expenses, and we do this transaction. Also, we have the accrued revenues, which is revenue we have to receive, but we didn't receive. So we have to record this accrued revenue, which is earned but not recorded yet. Another example, same company, they purchase 10,000, which is 10% Bank Negara bonds for in the 1st November 2015. In which the interest is paid biannually in 31st March and 30 September. Again, I want to remind you the financial period of this company end in June, end of June. So the financial period of this company end 30 of June. So if you see for this bond, they're gonna to receive the money from this bond at 31st of March and 30 September. So they have to continue till here we have our end of the financial period in the middle of this time. So we have here April, May, June, we didn't receive. We have April, we have May, and we have June, which we have to receive as revenue for us, but we didn't receive it. We will receive it in September. So we have to increase our interest revenue. You know, revenue, when you want to increase it, we put it in the credit side. The other side will be the accrued revenue. The amount is 250 because is the amount 250 for 3 months. Okay, so this is what we should record in our transaction in our journal. Then we continue to put this transaction, we post it in the ledger for the debit and the credit side, as you can see. Then as you see here, the accrued revenue is considered as asset and it will go to the balance sheet. Money for us with others. Okay, sorry, is sorry, the accrued revenue, yes, is money for us with others, so it will go to the balance sheet. And then in the next financial period, if you notice in July 1, we have to vice versa again the transaction. We have to put it totally in the opposite way. If you remember, this is the first transaction, accrued revenue, interest revenue. Now next year we put interest revenue, accrued revenue. This one to reversing the entry of accrued revenues. Reversing the entries of accrued and the prepaid, normally we do in the next financial period, which normally I don't ask you in the questions, okay? But you have to keep these things in your mind. Then we put the ledger of those accounts. So a summary of what we have learned today, we have 4 types of adjustments we have to do. We have prepaid expenses, prepaid revenue. We have accrued expenses and accrued revenue. The prepaid expenses, it's The accounts related, it's the asset and expenses. Accounts before the adjustment is assets understated, expenses overstated. So adjusting is assets and expenses. Then this one, we call it this one the prepaid expenses. This one is the prepaid revenue. This one is the accrued expenses, and this one is the accrued revenue. So this table is going to summarize for us what we have learned in today's topic.